Hi everyone. Hope everybody had a good day today in trading. Uh, I think yesterday or the day before I said the best place to get back into Ethereum is 1884, and I made a video around it. I went short on Ethereum from 1950, 55 area, closed my short around 1890, and then I'm long on Ethereum from 1878. So but how confident I am on my long here. So if you go to Quantreef, where I get all my values from, let's remove ETH and let's look at the market overall. Out of the 120, 130 crypto we have, 28 are bullish, 20 sideways, and 61 bearish. So still a very bearish market. But the more scary scenario is all the top probabilities, except in the small cap, you see some long, but overall, in the large, medium, small, they're all negative. Like, except BTC, which is showing some strength and ETH, most of all the coins are going down. They're in a bearish trend. So I'm not sure if this rally that we are seeing in BTC will continue for too long. But and the long probability since yesterday is coming down. So yesterday we saw the long probability was around 62. Today it's at 56%. But first let's look at ETH or BTC first. Again, probability is low, 56%, and not anywhere close to 68 required for a bullish market. Again, as if you saw the previous video, short is gaining momentum slowly. So nothing to trade, no clear values. Most of the traders, top traders, are still long at 62 and 62, 63%, 62. Volume by volume, it's almost identical. 2.4 billion and 2.29 billion. Most of the exchange you can see, except maybe an OKX, have bullish trend. So for sure. Oh, liquidity book is also 50-50. Largest buy order is sitting at 75 million. Somebody wants to buy at 65,000. So he's waiting it to dip a little bit, then go long again. But the most important is the liquidity map. So remember always the exchange has to make money before any retail people makes money. And they make money by liquidating all the retail investors. So again, there is long stop orders under 64.7. I think they are between 64, the lowest it went to. So let's say they're at 64.5, 64.4, where there is a bright area where I think um, the whales or the market makers will try to bring the money down to so they can liquidate all these individuals. So if you can put your stop orders a little more like 62 area or 62.5, you're safe. But definitely they will try to liquidate them and then they will go higher, or they will go higher first and then bring them down. So always remember when I say if they will go higher, try to short at this where all these bright lights are gone, or when they go lower, try to long where they have liquidated everybody. Exchange or the money makers have to make money before the retail investors. So think from their mindset. Think from what the exchange will do. They will try to liquidate these people so they can get their hand on these big orders they have sitting around in long and short. So let's see first they will go long or first they will go short, but they will have to liquidate these individuals. There is a major resistance coming at 64,948 and then 64,735. I think we saw a bounce from there today. That area hold. I think my buy price was 64,600 today, a little bit lower than this. So how do we find out where is the best buy price? Where is the best? One area to know is obviously the Fibonacci. There is the big support where the 1 day and the 4 hour support holds up. That's a good area to buy. The other area is you can always look at VWAP. Let's see. So today's VWAP was 65,300. So VWAP, so actually nobody knows what the VWAP is. It's basically what's the average of today's buys. So if in the morning the price was at 66,000 and somebody bought 60 Bitcoin, in the evening it was at 64,000 and somebody bought 40 Bitcoin. So that it will be the average, like what's the average price of buy today? So today average buy was around 65,308. So if you bought below that, means you bought below than most of the people that bought today. And if you bought above that, then you bought above most of the people that bought today. Also, VWAP acts as a magnet for the price. So if the price go down, it will always try to come back close to, or the buyers will try to bring it back to where there is. So in the large institutional crypto trading floor, they've showed the today's VWAP on a big screen, so everybody knows if they're buying below today's average or above today's average. So you don't want to buy above today's average. You always want to buy below today's average. So that's VWAP is one good place to find what's the lowest price supports and resistance. So today, as you can see, the big resistance would be 65,567. So if you look at the big 1 day and 4 hour resistance here, and then look at, it's going to be here somewhere. So that's a good resistance because they will get a good chance to liquidate most of these individuals here who are short, and then they can come down and liquidate the ones who are long here. Let's look at some other before. As we said, the probability we know is pretty low, but let's look at the 9 layers if there is anything. Upside liquidation pool is also, these are all the upside shorts, which will be liquidated if the price go up to 65,424. There is a upside liquidation pressure, which says the same thing if we were talking about. The price is trying to go up and liquidate these people first, before they go down to 64,675 to liquidate these guys. Very important to remember. Market makers decide where the market goes. Technical doesn't play much role. It's always the market makers. Further, each of the 9 layers, I would want to see where the whales. So the whales buyers are coming down. Yesterday or day before, it was over 60% of the whale were long. Now it's 56. Retail is 61%. So the whales are also losing some confidence that this rally will hold. Let's see the plan. As discussed, the layers, the 9 layers. This trend and structure is still in the green, but not by much, 63%. Volume, there's still a lot of volume. Fibonacci is, yeah, we discussed this yesterday. Fibonacci is doing the right place. Let me scroll down. Open interest, we can. So one thing I always look at is the CVD trend. There's a sell side flow, like people are putting market instead of doing limit orders to sell. So people are thinking that this will fall from here. But the most important is fair value gap. There is yesterday when the market was at 66,000, there was a fair value gap at 64,900, which got filled today. So there's no major fair value gap. On the top side, there is a fair value gap of 93%. So this has to be filled. It's not very far away, and it coincides with our previous discussion that the market might go up to 65,528, where it will see a major resistance, and there is a big fair value gap here. So this will definitely be filled, and then they will. So now again, we have 3 indicators. Think about it from an indicator perspective. The first indicator was the liquidity pool. What it said that these people need to be flushed or cleaned, like the weak hands. Then the second indicator was the resistance. There is a major resistance at 65,567. Then the third one was the fair value gap. There is a fair value gap of sitting at 65,420 and 93% probability of filling that. So that's going to be filled. Anything else? And again, there is a 65%. Oh, there's 7.666. So everybody's indicating that there will be a little bit of an upside, but if that upside will hold is hard to tell. Probabilities are lower than before. The whales are not buying right now. So I will, for my long from 64,600, I will, as soon as we hit 65,587, I'll move stop loss to entry, take half my profits, and then let's see where it goes. It can always come back, and then we can reevaluate. But for now, there is no clear indication that the market is either bullish or bearish, but there's a fair value gap sitting at 65,420, and there is quite a bit of people who will be liquidated at 65,500. So those 2 points at a little bit of an upside, and then we can decide where to go from there. Thank you.